Today, I'm bringing on one of the top mortgage specialists in Canada to go over exactly what's happening with these new mortgage regulations and to give an outlook as to what he thinks will happen in the Toronto real estate market in 2025. Let's get into it. Hello, everybody. It's Alex Drobin with Remax. I help people just like you buy and sell real estate in Toronto. If you get any value from this video whatsoever, please consider subscribing. And if you have any questions at all, just put them down in the comments and I'll get back to them as soon as possible. My guest today is a good buddy of mine. He's a mortgage specialist for RBC. His name is Dave Thompson. I wanted to bring him on to kind of go over exactly what's happening with these new mortgage regulations and to get his outlook on the Toronto real estate market in 2025. So let's welcome Dave Thompson.
Thanks for having me, Alex. It's a pleasure to be here.
All right, Dave. First of all, if you want to give a quick introduction about yourself, and then kind of go over exactly what's happening with these new mortgage regulations and how they've changed since December 15th.
Yeah, for sure. So my name's Dave. I work at RBC. I've done this for 17 years in the industry. I used to run a branch many years ago and jumped into the mortgage side of the business just because, numbers are something I enjoy and it's pretty rewarding helping individuals, whether they're, buying their first home or their third or whatever it may be. Just kind of enjoy the space, and I love talking real estate with clients. So, yeah, as far as the mortgage rules, Alex, there's definitely been some changes. It's all for the positive, which is nice. December 15th was a big day that got talked about for a while in the fall leading up to it. And what's happened is the government has basically removed some of the regulations as far as buying a home. Before, if you had less than 20% down, you were capped at a $1 million purchase price, where today you can buy a property for up to 1.5 million with less than 20% down. And so that just kind of eliminates that time people had to spend saving. You had to get 75,000 to get to the million. If you wanted to buy for 1.2 now, you only need $95,000, where before you needed 240 grand. And so that change has really helped a lot of buyers in the market. There's a lot of high income earners out there that have had student loans or just kind of were building up their asset base to be able to buy, and now they're in a position that they can buy without having to get that $240,000 to buy for 1.2. That individual today, they need $95,000, and so that's a huge difference in how much money they need to bring to the table and open some doors for them. And so we're seeing, a little bit more activity with people who previously might have been sitting on the sidelines saying, I want to wait and save to kind of buy for that higher threshold or price point.
So it seems like this is perfect for people who don't have that massive down payment, but are high income earners on a monthly basis. But like, for example, like what do you have to qualify for 1.2 for that $95,000 down monthly income?
Yeah. So, I mean, there's other changes that have happened along with that. So I just kind of quickly talked about the price change. They've also changed the rules that before, with less than 20% down, you had to pay on a 25-year schedule. Today, you can pay on a 30-year schedule, or the word amortization on that. And so you have the same amount of borrowing, but now can pay over a 5-year longer threshold. And that really helps on the monthly payment. So, for example, as of right now, basically for every $100,000 that you're borrowing, your monthly cost is $500 a month. So $1 million mortgage is 5 grand a month, ballpark, 1 that's a little higher, 5,500, and it just kind of staggers its way up or down on that front. As far as how much you need to borrow, how much income you need to get to that threshold of 1.2, you probably still need about 275,000, give or take, to qualify for that 1.2 purchase with the minimum down. But there are a lot of households that are there, in the city of Toronto, just with how much wage growth we've seen, et cetera.
My thing is, like, if you're affording that type of home, for 1.2 in terms of you're making that monthly income, and you're not there with the 20% down payment, like I feel like maybe you should wait a little bit before jumping into that. Do you know what I mean? Because I feel like you're making enough money where you should probably have those savings in order to put down 20%. And if you don't, like you have to look at different parts of your lifestyle. Now, my question for you, have you seen this affect anything? Because as of right now, it's January 24th. I really haven't seen that much of a difference. Granted, we are in the middle of the winter time. We're in a polar vortex right now. People aren't transacting as much. So we are in a pretty dead season real estate wise. But have you seen any sort of changes, anything happening, since that those rules have been changed?
Yeah. So I was on a call last night with a gentleman that's buying a place in the West End here, a condo, and it's the perfect storm for him. Really strong income over 300,000. I think he firmed up a deal last night on a 115 kind of price point, and so in that range. And so this has worked out perfectly for him, where he's got a little bit more than the minimum down. He's going to put down, 10%. So 115,000 he's putting down, but it just, to your point, as far as like whether they should or shouldn't do it, when you really break down the math, like if someone's living in a rental today, that's kind of pretty nice. Like it's probably $4,000 or $5,000 a month, right? And
Mhm.
so 60,000, 48 to $60,000 going out for the cost of living. And then how long is it going to take them to save up 100 grand? So that could be 3 years to save up 100 grand if you're saving, $33,000 a year. And so you take that rent and you take the 33,000 they got to save every year. Well, that's 3 years of time that's kind of gone by in their life, of waiting to get to that threshold. And so it does help some clients. We don't want people to feel stretched. So as long as the payments are good, that's important. And then people like yourselves putting people in the right property that's going to give them value, make them feel good. And they're not going to be calling you, in 2, 3 years saying, oh, it's too small, it's too this, and having to move. And that's where you guys are so good, in understanding your clients' needs and putting them in the right
Oh
property
man, thank you. Thank
that's
you.
long
Thank you
term.
so much. Thank you for that. Appreciate that. We're just so good. No, I always tell my clients, like, regardless of what you can afford, of like, I send you a bunch of people. Dave and I do a bunch of work together. But I always tell them, like, don't stretch yourself too thin, like it's one thing to be able to afford something, it's another thing to actually make those payments every month. So even if you can afford up to 1.2 to 1.5, I would still look at, slightly cheaper options, because right now there's so much inventory that you could probably get a good deal on something a little bit cheaper than, again, depending on what you're looking for.
Yeah.
Okay, next question for you. What is your outlook on the 2025 Toronto real estate market? What do you think is going to happen? Are prices going up, down? What are your thoughts?
Yeah, I mean, the crystal ball, right? So far this year, it's been very similar to the last couple of years. This is the time of year where people reach out for pre-approvals. We are very busy, getting people lined up and locked and loaded should the right place come along. Now, how many of those people will pull the trigger is anyone's guess, but there's definitely like a lot of active people as far as future buyers. A lot of people, no one wants to catch a falling knife, or no one wants to buy a stock when it falls 10, 15%. Human nature is to wait for things to kind of start rising, then we all pile on and suddenly, there's a surge in price. But by doing that, you're also, kind of creating some risk. So we kind of think,
Yeah, look at Trump coin.
there you go, right? Take a Trump coin or a stock or whatever it may be. But we kind of think prices maybe a little bit of an increase this year based on demand, based on falling rates. Do we think prices are going to go crazy? No, but if rates do fall and consumers, we as individuals adjust to the new cost of living, um, we could see a little bit higher increase in price. But my thought, pretty flat, maybe a couple percent. I think that would be good for everybody,
Hmm.
on that. And just, it's a way better time to buy today than it was 2 or 3 years ago when everything was in a bidding war. And so prices are definitely flat or down from there. And if real estate is something you want to own, you can never time real estate perfectly. And so buying and holding is always been the strategy to success. And that's what I kind of tell my clients that I'm talking to right now.
Absolutely. And just from a personal standpoint, it's all very neighborhood dependent, as you know. Like we
Right.
specialize in Bloor West, Ty Park, Roncy, Swansea, the Junction, Babby Point. Um, we've seen just a ridiculous number of showings booked on multiple properties within these first couple of weeks of 2025. So we just sold one property at 69 McGregor. It ended up getting like double digit showings within the first couple of hours that it was listed. And we sold it preemptively for $250,000 over asking. Then we
Right.
have this other property, Indian Road. I'm sure you saw that one, 299. It's listed at 4.35, with an offer date next week. We got a preemptive offer right away. So I think in terms of neighborhoods, if you're in a highly sought after location, I think the prices are probably going to come up a little bit more than that. But I agree with you. On average, it'll probably be like a couple percent overall
Right.
year over year.
Well,
Um, okay, my next question for you. I have two scenarios here. I get asked this all the time. Um, whether it's on social media, so I'll get a lot of Instagram DMs over the phone from clients during open houses, or yeah, just people will give me a call to ask about this. Um, if you're a first time home buyer, you're looking to purchase your first property, you're excited. You haven't gone to a mortgage broker just yet. Can you break down the step by step process for a first time home buyer in order for them to qualify for a mortgage?
yeah, awesome question. And quite simple to be honest. So, three things go into any pre-approval or understanding what you can qualify for. And those items are the income you have coming in, the down payment you have available, and just what's your overall credit history? Have you paid your bills in a reasonable fashion? Okay. And so income and down payment are the two most important things. The more income you make, the more obligations you can support on a monthly basis. And so obligations means monthly payments. So, two households making the same amount of money, if one household has no debt, then all of their income can go towards their mortgage, taxes, and a little bit to keep the lights on. If the second household makes the same amount of money, but maybe has a car payment, maybe has a student loan, they're going to qualify for a little bit less because they've got some obligations already um, accounted for. And so their excess cash that can go towards debt has been used towards those. And so they're going to qualify for a little bit less. So income's number one, down payment is number two. We just validate what do we have available, whether it's personal savings or gift from family. Gift from family is really straightforward. We don't need any verification on that. We
And
get a
by gift
gift
for
time to
family, you
time.
just mean like your family just giving you a lump sum of money.
Yeah, so that's something that for the lucky ones out there is available. We do see that from time to time where parents are kind of like, well, why wait until I'm 75? I'm going to give you some money now and see you enjoy, my hard-earned, building of savings or whatever. And so passing down a wealth is something we see happening. So down payment just tells us like what's your thresholds. If we've got 50 grand, then I know right off the bat if that's all that's available, which is still a lot of money, you can qualify for a max mortgage of, let me see here in my head, 700,000. Okay. Like that's kind of what you're
That's
looking
quick
at.
math.
So
That's quick math.
45,
That's Dave Thompson math right there.
45 down plus, a little land transfer plus a little legal fee in there. Um, and so that kind of gives you the parameters on it. But it's very simple exercise. I tell people the whole pre-approval process, the actual like me teaching you what mortgages are and how it all works. That's a half an hour, 40-minute call to give you kind of a good breadth of understanding. And it's 5 to 10 minutes for you to prep your documents and send them over. And from there, it's 24 to 48 hours for us to get a feel of the file and say, here's kind of your parameters of what you could be buying for, and off you go on that.
This might be a silly question, but a gift. So what if your friend wanted to, give you some money? If your friend wanted to give you $50,000, is that the same thing as getting it from family, or is there a different process there?
Yeah, so friends are something that's not accepted in the industry from a down payment perspective or gift perspective. It has to be family members
Has to be family
on that.
members.
And so every lender
Gotcha.
is a little different. Some lenders require the money to be in your account for a minimum of 30 days. We don't. We're just a simple gift letter that's signed, and it's a template that we have that we send out for signing. So just something to be cautious of, that not all lenders are the same on the gift letter side of things.
Gotcha. And then another question that I've been getting, I have a few people this year who are thinking about downsizing, selling their big home, moving into a condo, which, by the way, for anybody thinking about doing that right now, I think is a very good time because the condo market is in the absolute dumps and you could get a really good deal on a nice big condo right now, 12 to 1500 square feet. And you could get a pretty good price on your property. But I have a lot of people asking me kind of what's the process of, getting approved for a mortgage if you're downsizing? If you're selling a property and buying something else. Can you get into that a little bit?
Yeah, totally. So it's very similar to the first process, just understanding with the client, what are they going to walk away with from their sale? So we use a conservative number on the sale because often you're going to buy before you sell. So we don't want to have a sticker shock that we've, assumed a 1.5 sale price and it comes in at 1.4. So we always buffer a bit. We figure out how much equity is going to be in your sale. So sale price minus your fees, so realtor, HST, and legal, minus your mortgage amount, and that's your surplus. And then we take your surplus, and often people downsizing, they want to free up cash. They want to free up money to put into their, savings for retirement or whatnot. And so then we figure out, okay, we're selling for 1.5, we're buying for 900. On 900, we only need 20% down. Ideally, there's more than that if we're in the downsizing stage, but we simply look at your income, we look at your assets that are available if we need to, and that helps us run a pre-approval for you. So it's income, down payment, and credit history to figure that out. But often it's just a broader conversation of some of the trigger points as to why we're doing this, and then making sure they're set up for success with the cash available, savings, et cetera, on that. And so some people will come to me and say, like, I'm taking all my funds, putting them into my new home, and I only want a $200,000 mortgage. And I'll say, okay, that's great, but you make 300,000 and you've got 200 grand in RSPs total, and you're 55 years old. If we took $100,000 of the savings or equity in your home and put that in your RSP, if it's available, you're going to get a $53,000 tax return. So I just made you 53,000 on your net worth by putting it on your mortgage there. And if I show
And
you the
that's
math on
and
that
and
money,
and that's Dave Thompson right there. Okay.
there you go. Right? It's just, well, it's just like what good realtors do. It's not just about the immediate thing, it's a broad piece to the conversation, right? So you gotta expand it, then you gotta bring it back in on that. And so that's kind of the whole downsizer piece. It's very common. Life goes on, right, Alex? Like if the market's quiet, I'm not worried, you're not worried. We've done this for a long time. We know that if it's quiet, demand just builds. And just like we saw last April, May, the market went pretty crazy for a 6 week window there, where it was just everything was multiples, tons of offers, and so that's coming. We don't know when, but it's coming again on it.
Absolutely. Okay, what's the easiest way for people to get in touch with you? I'm gonna put all of your links and your description, your number, everything at the bottom of this video, but just so you can tell people where to reach you.
Oh, thanks. Yeah, so it's email is probably the best, or a phone call. It's David period Thompson at rbc.com, or you can call me directly 416-543-6129.
Okay, man. Awesome. Thank you so much for providing all this value every single time you come on. I really appreciate it. You're the best. Thank you so much for coming on once again, Dave. I'll talk to you in a bit.
Yeah, thanks, Alex. Thanks for having me. Take care.